Hey everyone, Ben here and welcome to Motivation to Invest. In this video, I'm going to be diving into two major tech stocks I think have the potential to at least double. So I'm not going to say these stocks can 10x, but I think they can easily double in a safe and reliable way. And I consider these companies great technology companies to invest in for the future. And ARK Invest, an investment firm which specializes in disruptive and innovative technology, and they were one of the original Tesla bulls, also agrees with me on this point, as these two stocks I'm going to reveal in this video are some of ARK Invest's largest holdings. So before we dive right in, if you're new around here, feel free to join the investing family by hitting that subscribe button and make sure you turn that notification bell on to get notified when I release new videos. And if you do find any value in this video at all, feel free to give it a big thumbs up. That helps out tremendously with the channel. And if you do want to know in real time exactly which stocks I'm buying, selling, and access my entire portfolio and join a thriving community of some of the finest people on the internet, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, let's dive in. Okay, so kicking things off at stock number one on my list is TWLO, ticker symbol TWLO. So TWLO is a market-leading cloud communications provider. Now TWLO is partnered with some major brands and customers, so this is a really established tech company and I think has some major competitive advantages. So some of TWLO's customers include Netflix, Airbnb, Lyft, and many, many more. So let's say Netflix wants to send a text message to all its customers at one time. It can do that through TWLO. Let's say Netflix has software developers who want to communicate with each other in real time. It can do that through TWLO. So that's what TWLO adds to these businesses such as Netflix, Airbnb, and many more. So here's an example of some of TWLO's products. So you've got TWLO Flex. So this is a cloud contact center platform. So instead of having an old-fashioned contact center or call center in the middle of a busy city and people have to go there, pay massive overheads for rent and electricity, you can basically have a cloud contact center where people can be in their home all over the world, and then they can actually perform customer service over the internet in a remote manner. Other services include programmable text messages, which I mentioned previously, programmable calls, so automatic calls, which companies wish to make. So really the main competitive advantages I see with TWLO is their technology and their amazing partnerships and customer base. Also have fantastic customer retention with, I believe, over 130% net dollar retention rate. And this means the existing customers which are using TWLO's services are staying with the platform and their customers are spending even more. Okay, so now let's dive into those juicy financials. We're here on Stockopedia. This is a platform I use to quickly analyze stocks, and we're going to run through some numbers. If you guys want to check out this platform and see if it fits your investing style, then I've actually got an exclusive 25% off discount link. I'll leave it in the description below. Feel free to check it out and see if it fits your investing style. So let's just dive straight in to the revenue growth over the past few years. So this company's been growing at a massive 60% revenue growth over the past few years. Now, generally, I see a growth stock as one which is growing at least 20% per year on the revenues. This company's growing at 60%, so that's fantastic to see. In terms of profitability, this company has been unprofitable in 2020. However, it's projected to be profitable in 2021 and 2022. So really, this was a young growth company. They were reinvesting for growth to scale, and now I believe they've scaled to such a scale where they're starting to see profitability come in. So that's great news to see. Their margins are improving over time. Balance sheet is looking like an absolute fortress. So the current ratio is basically your short-term assets on the balance sheet compared to your short-term liabilities or debts, basically those due within the next 12 months. So this company has a current ratio of 7.52. Now, I usually look for a current ratio of anything above 1.5 to 2. So this balance sheet is a fortress. Analyst consensus, let's find out what the analysts think. So we've got people from Deutsche Bank, Wells Fargo, Goldman Sachs, 14 buy, 7 strong buy, 5 hold. No one's saying sell this stock. Price to sales. This is where we come to the difficult part with this stock, because the interesting thing with the stock market, and I always like to say this, is you can't just bet on the best company. You have to bet on the best company with the best price attached to it at that time. So imagine you're into horse racing. You can't just bet on the favorite horse because it will tend to have the worst odds. And this is what we can see with TWLO. TWLO, exceptional company, valuation is a little bit high. So the price to sales ratio is 35.7. So you're basically paying 35 times the company's sales. Now, this company is growing fast, so if it can keep up that growth, then maybe that's worth it. And I personally actually own TWLO, but I didn't get in at this level. I got in a few months back. I did a video on this. So I first did a video about TWLO back in probably May 2020 here. So it was just after this little bump here. So I didn't get the first bump, but I got this major bump here. And the stock is up since then by around 130% since I made this first video for you guys on TWLO stock. So it's had a major bull run. There's been a bit of a correction now, so it has corrected down slightly. So it could be potential opportunity. ARK investors continue to sort of dollar cost average into this stock, and I do think it's a fantastic company. So diving into my advanced valuation model for TWLO, so I've plugged in all the numbers, I've even capitalized R&D expenses, I've been conservative on the future revenue growth, I've only suggested around 45%. And this gives us a share price of around $183 per share. So personally, if the stock dropped to less than $200 per share, then I'd add to my position. If it dropped below $183 per share, I'd load up the truck on this stock. At the time of recording this video, guys, in case things change with the company. Of course, guys, this is not financial advice. This is just based on the data which I've researched for this company. Okay, so now let's get on to stock number 2, and that is TWOU. So the ticker symbol for this company is TWOU. For TWOU. So TWOU is basically an online education platform which basically provides online degrees with universities. So the benefits of an online degree are numerous. They're less costly than a traditional degree where you have to actually physically go there and attend the lectures. They're also a lot more flexible. And if we do have another pandemic, which could happen again in the future, then it definitely makes sense to have an online degree. Now, there's quite a few platforms which offer online degrees such as Open University and many, many more. So I was trying to figure out what's unique about TWOU, what's the competitive advantage of this company, because ARK Invest is very bullish on this company and they actually own around 17% of this company. They've invested so much in it. I personally have shares as well, which I bought a while back. So the competitive advantage of this company, as far as I can see, is the partnerships they have with leading universities. So if I dive in here, we can see TWOU is partnered with some major universities, from Yale to Georgetown to Cambridge to University of Manchester in the UK to London School of Economics and many, many more. So I'm sure if any of you guys have been to university, you can probably spot your university on here. We've got Cambridge here. We've got some really sort of high-end universities. And the reason I'm looking at those universities is because the way that I look at it is if Yale, Harvard, Oxford, Cambridge are using this platform, then some of the more sort of standard universities will be happy to also adopt the platform. That's the way I personally look at it. But let me know your thoughts in the comments below. Would you do an online degree if the cost was a lot less than a physical degree? So let's just dive straight into the numbers. We're back on Stockopedia again, and this company's not been growing as fast as a company like TWLO, but it's still been steadily chugging along at around a 38% growth rate, which is fantastic growth again. Unprofitable company, but the margins have been improving again over time. So in my valuation model here, I've basically made the assumption that the company won't continue to grow at 30% per year, the same as it did in 2020, because I believe that was accelerated by the global lockdown. So being conservative, I've plugged in revenue growth rate for 2021 of 25% and a compound annual growth rate of revenue for the next few years of 20%. So that's me being conservative there. And I've basically stated the margin's going to improve over time. I've plugged in all the numbers. I've took into account employee option payments. I've taken into account the company's leases for their offices. So I've really gone to town with this valuation to really dive into the company. And it turns out the company is looking like it's undervalued right now. So this could definitely be a potential buying opportunity right now. So the estimated value per share is $50 per share, according to my valuation model. The price of the stock currently is $37 per share, so it's currently looking like it's undervalued. Now, with valuation models, there can be errors, there can be issues with them. So I've also double-checked this with another valuation model, another discounted cash flow model, and that came up with a fair value, $66 per share for the stock, which is actually slightly higher than my value. And the current price is 37. So again, 40% undervalued right now. There's a lot of bearishness at the moment against these so-called stay-at-home stocks, which people believe only benefit during global lockdown. So a lot of people are pulling out of the Zooms, the Pelotons, and even TWOU. And I believe that's impacted the stock. And there was also rising interest rates, which affected the multiples on tech stocks. So let's dive into the share price here. And we can see the stock reached $55 per share, which apparently was the fair value that I calculated. So I must be on the money there. And the stock plummeted down by 38%. And there's now been a slight sort of increase again, and it's up by around 10%. So around $37 per share at the moment. And I got in again, I did a video about this originally, and it was probably around April 2020. So I got in around $20 per share. So really good price. Unfortunately, I was rushing a little bit at the time. So I didn't put as much in as I wish I did. I should have put a lot more in during that time, but there you go. I can always add more, and I may add more on this dip right here. So again, guys, this is not financial advice. The major risk with this company I can see is the fact that people may not want to do online courses as much as things start to reopen. People might just be so sick of Zoom calls that they just want to get out there in the real world and interact with people. So I can see that as potentially having a hit on the company's revenue. Okay, so yeah, let me know what you guys think of the two stocks I've mentioned in this video. If you guys want to know in real time exactly which stocks I'm buying, selling, and access my entire portfolio. So for example, these two stocks which I've mentioned in this video, you could have got the real-time updates exactly when I invested into them before they ran up massively. So if you do want that kind of information and also access to my entire portfolio, the stocks and the story of how I grew my portfolio from around $20,000 to over $250,000, then feel free to check out that first link in the description below for the VIP membership group. And with that being said, if you guys found some value in this video, feel free to give it a big thumbs up. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. With that being said, thank you guys so much for watching. I hope you have an incredible day, and I'll see you in my next video. Invest safe.